Okay.
Run, 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 run.
Cooper's info is always so good, isn't it?
Yeah, he's very smart with it. So
Yeah. He's smart and wrote a book and like,
I think this is what I think it's what he wants to do, man. I think he wants to be a real life economist for
yeah,
NAR.
yeah, exactly. I mean, more power to him, I guess, right?
Yeah, rock and
Are we
roll.
recording?
It's recording.
All right, let's roll. Okay, Charles, good to see you. Welcome everyone to the Mile High Market Brief for Monday, August 24. And thanks for giving us last week off. We weren't off last week. Hey, Charles.
No, I think that we're learning from the best in the industry at MegaCamp.
Yeah, in fact, we're going to dive right into that because our first article that we're talking about is from Gary's vision speech. I guess it wasn't last Monday, it was last Tuesday, but during the vision speech, Gary told agents why rates haven't fallen and what it means for 2026. And this story is out of what, Charles?
This is Housing Wire, but I think that
Housing Wire.
every big news publication in our
Yeah.
space covered it.
Absolutely, everyone did. And Gary says in this as kind of the big picture story, Keller Williams expected mortgage rates to be falling by now. I think everybody did. Instead, rates remain in the high six range. Affordability is tight. Existing home sales are projected to remain near 4.1 million for another year. And if you're counting at home, that's 4 years in a row at 4 million. And I had lost count, Charles. I don't know if that number shocked you, but it doesn't seem like it's been that many years that we've been talking about 4 million. Gary Keller's message to agents is simple. Stop waiting for the market to change and find people who have a reason to move now. Go ahead, Charles.
Yeah, I think that as we're looking at this, I don't think the messaging has necessarily changed over the last handful of years. And so when we're looking at this, well, what are we seeing? Well, we have an affordability issue, and we're probably going to see that theme go through for the rest of the year and potentially into next year. And yet, what does the shift book tell us? The shift book tells us Gary Keller wrote that we need to go find the motivated. And so the messaging isn't changing. It's just the different market of the moment that we're in. We have a price point of homes that is elevated over the years, and we have interest rates that have stayed elevated. And so what do we have? To Russ's point, we have this affordability issue. And while we did anticipate, like so many other smarter people than us anticipated, that the interest rates would drop, what happened? Well, we got into this conflict with Iran, and that has kept the interest rates slightly elevated because they don't know what the outcome's going to look like. And so, what do we need to do? We need to be in as many relationships as we possibly can so that we can stay in emotional proximity to people. So when they're thinking about transacting business, because life happens, they're thinking about us, and that is our only job over these next handful of months.
Yep. You know, um, what I noticed about the projected to 4.1 for 2026 and in the fourth year in a row is the last time we had 4 years in a row around 4 million was the Great Recession. And now it wasn't 41414141 like it's been the last 4 years, but it was 4 million, 4139, 4 million, something like that. It was a little bit
Yeah.
more, it was a little more flavorful, but but um
Yeah.
the other thing that was interesting is that after the fourth year, guess what happened? It went up from 4.1. I can't remember if it went to 4.4 or 4.5 or something like that, but it did end. And and then and then that next year kicked off, what was it? Like 12 years of consistent improvement over the previous year, the longest non-recession in real estate that's ever been recorded. So So I don't know. To me, the news for agents is stick it out right now. Like this is the
Yeah.
time to stick it out because I was in business during the Great Recession and it was painful. And man, you had to make a lot of phone calls to find, I was at the time selling about 40 houses a year, but it was with a lot of work. It
Well, and
was
I
a
think that's also what's also interesting, Russ, is that even if we look at the affordability remains the problem, and even that third bullet point it says, yet KW's message wasn't that consumers should wait. It's that Keller argued that long-term ownership still matters for wealth building, particularly for younger buyers. And what's interesting about that is how they illustrated that point was go back into any year, and so let's just call it 2021. If we could go back into 2021, how many of us would go buy as many houses as we possibly could? Or if we go back into the early 2000s or insert whatever here, how many people would buy homes? And that's how Gary was illustrating it to us. And maybe that's one of the talk tracks that we should internalize when we're talking about our consumers, just about like, hey, would you have bought more houses 10 years ago, 20 years ago, 30 years? And every hand should be going up if they understand what's happening.
Yep, absolutely. So what do you do right now? You find people that have enough money that don't care about interest rates. My mother is selling a house right now and she is buying a house right now. She is selling with no mortgage on the property. She is buying with cash
Hmm.
and she's doing it because she chooses to do it. And
Yeah.
find people that are changing jobs, find people that are getting married, find people that are getting divorced, find people who are having babies, hang out at Target in the baby section. Find the downsizers and the relocators and the life eventers because those people are going to move, and every year about 4 million of them do, and then everyone else is just making a decision to do it.
Yeah.
Moving on, what can the government do to lower rates? Why don't you kick this off, Charles?
Yeah, so one of our favorite articles that we like to bring in, Logan Motoshami, the lead economist from Housing Wire. And what's interesting is we go through and we're looking at this, and it was a little bit of a lull last week. And so the top piece that says demand is slowing is rates above 6.64%, but housing activity has not fallen sharply. And again, this just highlights even what Gary Keller said last week was it's an affordability issue. What we're seeing with interest rates and with home prices not dropping significantly is we're seeing less hands go up. And so even if we were to look at this bottom right graph around mortgage purchase application data, this is kind of when you start to look at some things and it makes you start to wonder, okay, what's going on? What we can see is that we're below last year. And while we don't necessarily care if we see a dip, what we don't want to see is a trend of this downward year over year trajectory where it's going down. And so, yes, this is going to be refinances that are coupled in this. Plus, these are your consumers that are reaching out to the lender to go figure out what they qualify for. So I think that the biggest point to this is even just what Russ said is that we just need to be making sure that we're having as many conversations with people because what this graph doesn't show is life events. These life events pop up, and if you are looking for that new technique when we're talking about our GPS for our strategy, and Russ said, go hang out at Target in the baby section anything works and nothing doesn't. So where can we go have as many conversations as we possibly can? But Russ, like as you're looking at this and this is national data, like what are you pulling from it?
Yeah. I mean, I think that we look at this article from Logan Weekly, and what's interesting about it is there hasn't been a lot of trending. I mean, one week pending sales are slightly down, one week they're slightly up, one week purchase applications are up like this week, but they're down year over year, and the next week they're down and but they're up year over year. Like we're just in a lull type market. And it's exactly what Gary talked about it at MegaCamp. And like he says in Shift, it's not about the market, it's about what you do. It's all about your activity. Um, and this is the market where your lead gen has to increase because there are people out there and someone's going to find them. And let's hope it's you. But it's
Yeah.
it's it's a lot of the same. And buyers and sellers don't like uncertainty, and we've had a lot of uncertainty, and we're going to have a lot of uncertainty, quite frankly, probably until November at least, with elections, because you know the elections always breed uncertainty in the electorate. So,
Yeah.
um, moving on to something a little more local, the housing market spotlight, how to read national housing trends in your local market. This is also from Housing Wire. And here's what it says. Denver isn't just gaining inventory. The bigger issue is that sellers are adjusting faster than buyers are responding. And that separates Denver from markets that are simply experiencing healthy inventory growth. Right now, median list price is down 4.4% year over year in Denver. It's at 669. More than half of listings have taken a price cut. The median list price over the last 4 months has fallen from 700 to 670, 669, with new listings entering even lower. So we are in a bit of a funk in Denver. Denver had 720 new listings versus 627 new pendings. So there's your there's in one week why inventory is going up. That's a pending to new listing ratio of 87%, which means for every 100 new listings coming on the market, only 87 are being absorbed. And if that continues, inventory has room to build and sellers face more pricing pressure because the more choice, the more you've got to the more of a price war you've got to start. What's this piece about Minneapolis? What's the comparison there?
Yeah, like as we're going through, what we're seeing is multiple different things. So, right, we're seeing these three different markets, and if we could look at the numbers, wherever those numbers just went, we could see that Minneapolis has significantly more inventory, but 101% absorption rate. So we're seeing more inventory pop on. And as where we see Chicago, we have more buyers out there than we do have sellers. Where in Colorado, in Denver specifically, what we're seeing is we're seeing more inventory than buyers. So that's what we're seeing right now. We're seeing multiple different areas that have three different markets, right? We have one market where for every home that they're putting on, they are seeing it come off. We are seeing one where there isn't enough inventory. They have these inventory constraints. And then us, what we're seeing is that we're having more of an issue to where we're seeing 53% of all homes in Denver take a price cut, where we just saw the slide where it says only 42% of all homes in the nation are taking price cuts, but yet Denver is hitting at this 50%, and we still have inventory on the board. And that just goes to show, with our price point being where it is with the interest rates, it's still about finding them motivated because there's tons of inventory on the board for people to go off of. So then for me, when I look at this, I say there's a lot of opportunity for our buyers. And so Russ, if we're going through from the buyer perspective, because we don't think this is a super favorable market for sellers, what is one or two things that our agents should be doing to position themselves to help more buyers in this market?
Yeah, I think I think number one, having conversation about reality is important. Like
Mhm.
more is coming on the market, less is being absorbed than is coming on the market. There's more options out there, and and when you take your clients through a home, it has either had a price cut or needs a price cut.
Yeah.
In at least 50% of the time, 50, what was it? 53% of the time. So
Yeah.
I think that, I think it's a good time to be a buyer because sellers are waking up, um, which gives the buyers leverage. They can talk price, they can talk concessions, they can talk repairs, they can talk seller contribution towards closing costs. It's a really good time to be a buyer, and on the other end of that spectrum, uh, these numbers right on this page should be in every listing appointment that you go on. You know,
Yeah.
because sellers either A, ignore the news, or B, hear the news but pretend like they didn't hear it. They need to know that median's down, that people are pricing wrong and having to do price cuts, that median over 4 months has dropped significantly. So I would be having real pricing conversations, real adjusting price conversations, and making sure that we're not going to take a listing that is crazy priced because we're just going to add to the statistics.
Russ, one of the things that you just said made me think of one of the slides that Gary put up and at the economic overview, and it was something like buyers think it's 2008, sellers think it's 2021. I think I'm still 25, and the market doesn't care what anybody thinks.
Right. Very
And
true.
so, how are we going through and educating our people as much as we possibly can so that we can help them make the decision to get them to the finish line because that's why they hired us?
Yeah. And by the way, what's nice about this article is you are showing a buyer's market in Denver, a seller's market in Chicago, a balanced market in Minneapolis, three different big cities, three different stories. Real estate is local, and don't watch the national headlines. Especially, you can watch them if you're in Minneapolis, but you can't watch them in Denver.
No.
Um, and then another really small print one. Thanks, Charles. This is about housing price. Home prices are rising nationally, but the local divide is growing. We literally just said that. And on the right, you'll see a list of places where home prices are falling year over year with the amounts in white to the right. And if you look through here, Pueblo 2.35. This is July 25 versus July 26. Greeley's in there at 2.2 down. Denver is in there at 175 down. And Springs is in there at 132. Is that all of the Colorado mentions,
Yes,
Charles?
sir. Yep, just the three.
Yeah. Um, So, big story. National home prices are appreciating, but the 1.1% year over year national number hides a major split. Of the 300 largest housing markets, 64, yay us, are experiencing year over year price declines, while 236 are appreciating or appreciating a tiny bit. Um, what else is in here, Charles?
Yeah, I think that as we're kind of going through and we're looking at this information, what we have to understand is this. We have two options when we're putting homes on the market as far as making it look better than the other inventory on the board. So, what we're looking at firstly is that we have more inventory today than we did in 2019. And in 2019 is what we would consider the last normal housing market that we've had in the last handful of years. And so, as a seller, I have two options. I have only really two options to be able to make my home look better than the competition. And option number one would be, well, to actually put the money into the home and to be able to go through and make the kitchen better, make the bathroom better, but yet that costs dollars. And in this market, we're seeing sellers that aren't very sure that the home is going to sell in a reasonable amount of time, and they're not going to go behind door number one too often. So that leads you to door number two, and door number two is to lower the price. And so I can either improve the value of my home by going through and infusing money into it, and or I can lower the price so that I can compete with either a better home or a home that looks similar to mine. And so as we're going through and we're doing these different conversations, what we also have to keep in mind is this, as real estate agents in Colorado, the only people that have to sell their home are the people that have again these life events that are happening. We're not in 2021 where when the money was free and the people were just like, you know what, I'm bored of this house. These are motivated sellers and motivated buyers that are selling in these conditions. And so when we look at an article like this, and we can talk about falling year over year numbers, who's losing money? The people that bought at a high that are selling at a low. These are not people that bought in the early 2000s or quite frankly pre-2021. these are people that have bought in the last 5 to 6 years that have to sell today that are actually losing money. And so I think we need to make sure that when our consumers are seeing headlines like this, that we are educating them. And we've seen the panelists. I remember you had Gay come through and speak at one of the events here in Colorado, Russ, and Gay walked through what they bought it at and what they're going to sell it at. And she ran through all the economics of what their home is worth and that equity analysis
Yeah,
because headlines like this are super misleading.
absolutely. And I wanted to also note on here, if you look at all those, I know it's small print, but Texas, Florida, Colorado, like Texas, Florida, Colorado are the challenging places in the country right now. There's some other ones. Kentucky's got some challenges. North Carolina, some spots in Georgia. But if you look nationally at the worst markets, Texas, Florida, and Colorado are leading the pack. So congrats to us.
Yeah.
This, by the way, doesn't mean Colorado's real estate market is crashing, but it does mean that if you're using national data, you're misleading your clients.
Yeah.
Um, Colorado housing markets shows diverging demand across property types, ski towns showing signs of resilience. The big story here, Colorado headline numbers look stable, but the property level data demands tells a different story. Single family homes are holding up relatively well, while condos and townhomes are experiencing noticeably weaker buyer demand. Um, what are you seeing here, Charles?
Well, I think this just goes back to any time we've had the regional rally and a lot of the information that Cooper gives us, right? That we're looking at this and what do we understand as the real estate economists of choice in Colorado is that we are seeing that there's two different worlds, two different realities. We have the single family detached home, and then we have attached properties. And what we understand, knowing the information and knowing the market, is that a lot of this is affected by the HOAs, right? We are seeing this HOA where the HOAs are too high, and who is typically your buyer, your avatar purchasing a condo or a townhome? Well, single family. And it's a probably a single family new buyer,
Mhm.
right? You have a new buyer purchasing a condo, a townhome, and yet they're priced out of this market. And so, how are they going through to be able to make these properties look more advantageous to this type of buyer? Well, they're having to drop the prices. And the only reason why they're having to drop the prices on these homes is because we have an affordability issue with the HOA fees. And so, as we're going through here, Russ, I know that you have a couple market centers up in the mountain areas. And so I think, what are we seeing in those areas?
Yeah, I mean, different stories in different places. Summit County, um, single family home sales up 6%, inventory down 15%. Prices have increased in Summit. Um, and prices have increased in Summit County, especially in the higher end
Mhm.
areas. In Pitkin, single family sales increased 16%, while average sales price jumped to 11.4 million.
Yeah.
Pretty impressive. But other Western Slope markets have weakened. Route County single family sales down, Steamboat area, on average price down, Garfield down. So things are different in different parts of of the country. Eagle County, generally speaking, it's not on here, but Eagle County is generally kind of flat, but it is very different depending on price point.
Yeah.
With some price points way exceeding last year, and other price points lagging significantly. So it's an all over the place bag.
Yeah. And so, Russ, I think like as we're going through and we're looking at this information, one of the things that I think that we can tell by all these slides, we saw different states doing different things, whether it was a seller's market, a buyer's market, or a balanced market. We just looked at super hyper local Colorado data where it has bounced around depending on the property type and or the area that you're in, real estate is super hyper local. And if anything this thing has shown us is that we should be going through figuring out what the motivations are for our seller and our buyer, run the numbers for them, show them the data, and then let them make the decision on what's best for them and their families.
Yeah. Know your market. Know what's going on in the county that you're in. And and note also, like I was saying in Eagle County is a really complicated story when you
Mhm.
look at it by prices. So, one of the things that I do every week is I run my market areas by prices. It's something KW used to teach a lot called a total market overview, where we break the market down price point by price point by price point. You might divide your market area into 10 or more price bands. And while it's not always the case. Sometimes you'll see significant health in certain areas and not in others. So
Right.
study your market. That's what you're getting paid to do, right, Charles?
Oh, absolutely.
Yeah. So, all right, folks, have a great week. See you next Monday.
By all.
Bye.